what's happening in this market. People are happy, people are scared, and what are they supposed to do? One of the reasons I have come with this podcast is I have got so many calls of people asking what's happening in this market. The only response I have at this point is people who invested in gold and silver are making money. People who are invested in equities at very high valuations are losing money. There is no mystery to it. We have been saying for a long time that Indian equities have been sustained illogically by the mutual fund industry by buying shares since they were getting in. The valuations were out of whack with the earnings, and sooner or later it came back to haunt the market like it's haunted today, that the valuations are now getting compressed because earnings growth is nothing compared to what the valuations demand. Of the companies that have announced results, the earning growth are less than low single digits. P's are in 30s and 50s and 70s. Something had to give. Now the conundrum, why gold and silver? Of course, we all know what's happening internationally. The Trump is rattling out the Greenland issue, the tariff issues, and everything else is telling you go for comfort because global trade is in turmoil. But for India, there is a much more bigger reason. And we must understand what's happening in India. We import literally all of gold, quite a bit of silver in this country. Rupee dollar, which is reflective of our demand supply of foreign currency, has been depreciating and rapidly in the last 12 months. And it gets worse because India's equation is as follows. We have a deficit on merchandise account. Services revenue used to give us some relief on that one. And all deficits were funded by financial flows. Now, if FDIs and FPIs both are selling, where will the foreign currency come from? And that is what took the rupee down to almost today. A 1 year forward is 94 rupees. Market is today telling you 1 year forward is 94 rupees. It can get worse. In fact, our reasoning, rupee should be closer to 100 by the end of the year. You need to export goods for earning foreign currency. If we cannot export enough in a global environment, we'll be deficit for dollars no matter what we do. And our exchange, we say we have a $670 billion, will not be sufficient for this purpose because we also have a debt of $700 billion at the same time as we carry a reserve of 670. Now 670 also has gold in it, has got SDR in it, and has got currencies in it. So you can use only maybe 30-40% of the reserves to manage your dollar currencies at this point of time. And our options to secure the market are running out at this point of time. And what we saw today, I'm sure the numbers will come out. If the FPI selling continues at this intensity and FDI doesn't come in, the inflow of dollar does not happen. If we don't have inflows, we run a merchandise deficit and therefore we will be unable to secure the rupee rate. Now comes the gold and silver con. What happens in gold? The question we all have is, how long can India keep importing gold as rupee falls, our foreign currency becomes an issue, and we allow investment appetite for gold, which is unlimited today. What we are seeing today is the first big influx of people from equities to gold. If it accelerates much more, we reallocate 10% or 15% of mutual fund portfolios towards gold and silver ETF, we're talking of a huge commodity requirement in this country. How long can India afford to keep importing gold with 6% and odd GST and custom duty put together? Is it even feasible for us to look at 10, 20, 30 billion dollars of gold imports? Because people are shifting their portfolios. It's not about use anymore. It's about security. It's all about returns. It's all about FOMO. It's all about people saying, my God, we left out. And where do we feel secure? With the global environment, with the rupee dollar. What's the best way to secure yourself? Is gold. Because gold, one, parity with dollars. Number two, it's imported. So if the rupee depreciates, my value of gold goes up. Even though global prices go down, I will be secure because with the rupee dollar going down, my gold prices are there. Number three, it's most liquid. It's not subject to market vicissitudes. I don't need to worry about quarterly results of companies who are going up and down and price and up and down and so on and so forth. So what does an average investor do then? He goes for security. Why average investor? Sensible investor will go for security and says, let it all play out. Let the valuation stabilize, let things happen, and therefore the race to buy gold starts, and that's what's happening in this market. Question to everybody is, how long can it continue? What will the government response be when it sees the surge of imports? And will we even have a situation where import duties, curbs start to kick in at some point? Hopefully not. Hopefully sense will remain. Hopefully we will be fine. But these are all the ponderables as we walk back home today with the market for 350 points down, gold 4-5% up. We just see a freeze in gold prices. And you wonder, have you been left out if you didn't have gold? And if you didn't have, what do you do tomorrow morning? Should you buy or wait? If you wait, you will tend to lose out. If you buy all of it, market may see a correction. But then, if your horizon is 3 years and 5 years, do not worry. Do not worry, because if you could put your equity mutual fund for 5-year scenario, why are you looking at gold with a 1-year scenario or a silver with a 1-year scenario? For all you care, look for a 5-year scenario and you'll find comfort in saying, yes, I may have buying as gold at 150, but am I not going to have a decent return 3 years, 5 years down the line? Just the way I expect equities to do well, and that's what I put money for in all the mutual funds and my equity investments. Therefore, people answer very simple. We are telling everybody who's coming to me and saying, listen, I don't have enough gold. There's nothing called enough. There's nothing called enough. What is enough? I don't have enough money. Nobody has enough money. Otherwise, we won't be not all working. So, theoretically, no one has enough gold and silver. Therefore, you have unlimited appetite. Will the equity market stabilize? Of course, they will stabilize once in a while. Nothing goes down forever. Nothing goes up forever. They will stabilize. But Indian companies' valuation need to compare with what the performance is. This state of ridiculousness which has existed is now coming out, and hopefully, and I'm hopeful, it'll clean out. You can't have companies with 50, 70 Ps and then say, I want equity returns in a growth environment which is telling you 3 to 5% growth in earnings. It won't happen. Therefore, conclusion. 1, it's never too late if you want to be in gold. It's never too late to replan your portfolios. It is never too late to think realistically and say, as a country in India, with our compulsions today, we will see a rupee depreciation coming around, and therefore, how do I hedge myself? You hedge yourself by buying an asset which is secure not only in Indian context but globally. Yes, silver may have a lot of speculative intent in it, and therefore you need to be really, really smart to trade it or have really nerves of steel to buy at these rates. Gold gives you the comfort. It's a long term, it's secure. All the central banks want it, and with the turmoil in the world today, the whole world will want to invest in gold. Look at Africa, look at America, look at China, look at Far East. Retail public is just about getting in there, and I hope that it's wrong advice to people to say buy into an asset which actually has no real value creation potential, unlike a factory or a business. But so it's sad to recommend such a thing, but well, our job is to also secure our future. So while you balance your portfolios, you don't go 0 and 100 and so on and so forth. That doesn't make sense to you. But you balance by saying, I will not invest, I will look at equities with a very high PEs and low earning potential and try to get out of them and rebalance my portfolios. The moral is, it's never too late and never be scared. Good luck, my friends, and I'll hope to see you soon